As we wrap up the Country Viewpoint commentary on our market sectors, we're looking at grains with ProFarmer Grain's Sean Hickey. A Merry Christmas to you, Sean, and everyone at ProFarmer Grain.
You too, Ricky. Thanks for having me on.
And when it comes to our farmers, they're going to be busy. Hopefully they can get a break for the Christmas celebrations despite the harvest rolling on. That's going to be a big factor going into 2023.
Yeah, that's right. We're starting to see the La Nina weather system kind of start to dissipate a little bit as we come into 2023, which is providing a little bit of warmer and drier weather, which is allowing some growers to get out into their paddocks and make good progress now with harvest. We have seen it really kick up on the East Coast, which is great. Growers will obviously be out into paddocks into kind of January and potentially February in some cases. But we are starting to see some more positive signs, particularly on the quality side of things, which has been a little surprising.
Yeah, I'm glad you mentioned that, actually, because we have been hearing some mixed messages regarding quality. What I've been picking up is exactly what you just said, is despite concerns about quality, it's actually coming in reasonably good.
Yeah, that's right. Obviously, throughout October and November, we saw those heavy rainfall events and flooding in some cases throughout parts of New South Wales and Victoria. And that kind of led to a pretty wide assumption that we would see lower protein levels and just poorer quality, particularly throughout the wheat crop on the East Coast. That obviously had a pretty big impact on pricing. You saw higher millable graded wheat supported while feed wheat kind of came back quite a bit over the last month. But the quality itself has surprised. So we've seen a greater proportion of milling grades than was anticipated, and that has kind of fed through into pricing. So we've started to see a little bit more pressure come onto your APW 1 grades and above, whereas feed grades have actually held up a little bit better in comparison, particularly because we are starting to see some supply concerns on the East Coast with the delayed harvest. So those that are after the feed grade grains are certainly looking to buy now.
Yeah, the harvest infrastructure, the storages and the silos and the ports are going to come under some strain because nationwide, they're, according to ABARES and many other commentators, it seems we're heading for a record crop, but it's a mixed picture. We're including an expectation around 16% of crops will be abandoned in New South Wales.
Yeah, in terms of those supply chains, going to be significant amount of pressure over the next kind of two months, and that comes from obviously having 3 really big crops in a row. So we are seeing storages relatively full for this time of year, and then you've got another record crop on the way, adding further strain to that, and ports also operating at export capacity as well. So along with the flooding, closed roads, damaged roads, it's certainly all heading towards some logistical challenges. But as per usual, growers will adapt and will overcome it. But yeah, the season has some challenges, and that's to be expected, I suppose.
And I guess on that later side, I did hear recently there was a crack team of Viterra operatives sent over into the Western Victorian Mallee to help handle a larger than expected amount coming through from there. It's a positive in a sense to see so much coming from an area that can be touch and go sometimes.
Yeah, that's right. The Mallee is such a marginal area that does receive typically so little rainfall that crops are obviously much smaller in comparison to some of the more fertile areas. But this year they're looking at a record crop, particularly across wheat and the like. So it's been a really strong season there. Harvest deliveries are coming in kind of quick and fast, and with the way we are with labour shortages at the moment, you've just kind of got to do what you can do to kind of get things done. So having some Viterra sending across some harvest workers across into the Mallee is certainly a good thing, and it'll make things a little bit easier for those working on the bunkers and in the silos, that's for sure.
For sure. Now, Sean, the Rural Bank organisation that ProFarmer Grain is sort of within that umbrella or tent. You can tease that out if you like, but you've got your big agricultural outlook out on Tuesday, and it's a pretty rosy picture generally across the board for our farming sector.
Yeah, that's correct. So the 2023 Australian Agricultural Outlook Report has released on Tuesday, and it is an interesting one. There's obviously some really positive factors which are driving the outlook. You can kind of look at those higher prices that we've seen, the really strong production across across most commodity sectors. But it is being mixed a little bit by those global economic challenges and continued high production costs, which we have seen throughout parts of 2022, but are certainly going to be an ongoing factor into 2023.
Well, I do notice amongst you sort of very helpful colourised indications of which sectors are going okay, pretty much all travelling well, but possibly some pressures on the wool side.
Yeah, and we've seen that over the last couple of months as well. We've seen really strong wool supply, thanks to, I suppose, the rebuilding of the flock and amongst those kind of stronger seasonal conditions. So we've seen some real pressure come into the wool market, given the ongoing challenges we're seeing throughout China, which is one of our largest wool buyers. We've seen a real kind of downwards trend across most microns, but particularly finer microns. So with volumes kind of forecast to continue increasing into 2023, and those kind of demand issues, particularly global demand issues with the potential for recession, it's probably more of a challenging outlook for Australian wool producers than perhaps what we are seeing in other commodity groups.
Well, I want to touch on in a moment input costs, because it's one we try and talk about as much as we can, because that's what farmers are saying. Whilst the prices are good, that's where the threat is in the coming season. But when it comes to farmland values, looking at a graph in your report, it's just incredible the amount of price growth in value per hectare since, say, 1995.
It is, yeah. It's particularly over the last kind of 2 or 3 years as well. That growth in median price per hectare has really taken off, and that's obviously driven by those record low interest rates that we have seen over the past couple of years, along with those strong commodity prices and just kind of desire to expand by both corporate and family farmers. What we are, obviously, with the 2023 Farmland Values Report will be out in May this year, but given we have seen some more global economic pressures, inflationary pressures, rising interest rates, we do think there will be a little bit more pressure coming to the market this year, which might dampen that growth. But there'll be growth nonetheless again for the last 12 months, which is just, it's quite an incredible performance across the farmland values market.
Yep, and I imagine that'll have an impact on council rates amongst other things, unless councils cut the farmers a bit of slack. But when it comes to other major input costs, what are you foreseeing are going to be the major challenges for farmers in 2023?
Yeah, I suppose in terms of the fertiliser market outlook, it's certainly going to remain above your longer term averages. We are seeing the high energy prices throughout Europe really push the gas-based fertiliser prices higher and just kind of maintaining that volatility. And that's certainly going to be the case over the next kind of 6 months. Prices should ease a little bit from the record highs that we did see this year, particularly for the more phosphate-based fertilisers. But for those nitrogen-based fertilisers which are produced via natural gas, we think that they'll certainly remain high, if a little bit lower than what we did see at times this year. But having said that, the high commodity prices, particularly across the cropping sector that we have seen, will help growers hopefully maintain their margins to a degree, and be able to get a full seed, whatever level they wish to, rather than having to restrict their crop based on the amount of fertiliser that they can purchase.
Now, Sean, a couple others that stick out to me in this report. First of all, we always like the outlooks of what you want to predict, where things are happening in price. You've got a fair range here, but looking at cattle, it does appear to me that you're predicting, Rural Bank, that we're going to be hovering still around that sort of maybe, 900 to 1100 cents per kilo carcass weight going through to June next year.
Yeah, we anticipate that's the supply of cattle will continue to increase, thanks to that kind of strong pasture availability. But there are a few mixed factors which are driving prices. So we've got beef production jumping by around 5%, which should lead to some more competitive pricing, at least at a domestic level. And then inflationary pressures also may weigh on consumer spending, and that could potentially also impact demand for those higher end beef products. So we do have carcass weights around about that level, but we anticipate some softening of demand, which may weigh on prices as we come towards the middle of 2023 particularly. Well,
and also lastly, as we come into summer, usually there's a whole lot of fruit around in the horticulture sector, but you're projecting through to June next year a potential heavy drop-off. We've seen increases in fruit and veg prices, but it looks like a lot more variability in potential future fruit prices.
Yeah, horticulture is a really interesting one, and it's certainly made the news quite regularly over the last couple of months with fruit and veg prices nearing all-time highs in some markets, and that's obviously been driven by the supply issues caused by the rainfall and flooding, particularly on the east coast, for certain varieties of fruit and veg. So coming into 2023, we should see conditions return to normal, which will assist producers with those lower irrigation costs that they'll be left with. But the improved supply and the strong production should really begin to weigh on prices over the next 6 months, particularly following our kind of February-March period, which will push prices lower. We expect that they'll remain above longer-term averages, but they'll come back from the record highs we've seen over the last kind of 3 or 4 months.
Well, certainly great to catch up with you on a broader chat in what's happening in farming, Sean. We often focus particularly on grains and oilseeds on the Country Viewpoint program. Sean Hickey from ProFarmer Grain and in the Rural Bank, thanks so much for joining us and have a great Christmas.
You too, Ricky. Thanks for having me on.